Hello guys, in this video I'm going to show you how is it that I trade the bigger picture. Now on the bigger picture, if you guys go here, we are looking at our daily. This is our daily. That means that each candle, each one of these candles, it's a day. Each one of these, it's a day. That's 1 day, 2, 3 days, 4 days, 5 days. Each one of these is a day. So to know where the market is heading or where the market is trending, what I like to do is I'll go to the day and I'll go back 10 years. You can go back 5 years. You can go back 10 years, however many years. I think 10 is enough. And this is how far it will take you. Now notice the market's trajectory this whole time. If you notice how within this bigger picture, this bigger pattern, it has smaller patterns. This is how we are able to predict what can happen in the future. It's not guaranteed, but it will give us somewhat of an idea of where the market can head. For example, here I have my highs. This is my resistance where my highs are connected. This is my higher high, another high, and so on. I have my lows. Notice that there's nothing above, there's nothing below. These are my lows. The straight line, these are my lows. I could just cancel this right here. All I needed was these two. This is all I needed. This low, and then I extend. Extend to the right. And look, to infinity. So had I had this extended to the right, and the market is trading above here, right? You already have this trend line, which is also your support. The market currently is trading around here. Now we went over a pattern that is the rising wedge. This right here is a rising wedge. Don't worry about this. Don't worry about this one right here. Let's focus on this one. A rising wedge. Slope eventually meet price. See how price just broke out to the downside? So if you were catching a move to the downside on this rising wedge, because you already know resistance is right here, this line is resistance, which hasn't been able to break. So now if you know this is resistance and it has had trouble breaking above it, and now we have this support holding price above, and then eventually these two meet at this angle, that's a rising wedge. So what's bound to happen is this right here. What happened right here? The price just drops. So when you're able to spot this rising wedge, you can find an entry around here. You can go in around here at the break of the main trend. You remember, it has to break your trend. This is your primary trend. This is your trend line, your uptrend. It broke it, and then it traded under. That's your indicator for weakness. So as soon as you see this rising wedge, we broke the trend line. You can take it short around here. Around this area, you can take it short. Now, how far is it going to go down? Well, you can find out by, we were right here. How far is this going to go down? Well, if you connect your lows, this low and this low, and just extend it. Just extend to the right. Just extend. You could have at least up to this area and then take profits around here. If you already have these lows drawn out already waiting for you, then you wait for price to drop up to here. It's a rising wedge. We got this rising wedge. We got resistance and support. Notice how price stays within. Eventually it broke and then we fell. Now I can take this off and I'll make this blue just for the visual, Now we have this channel. Price is in this channel. Notice how it broke under. Let me remove this. See how now price is in here? So now we have price trading above the support, just cratering around the support. It broke, came back, retested. It was too weak to get back above this channel. Too weak to get back above. So as it's coming up, this candle is weakness. If you guys learn how to read the candles will tell you a story. This candle is weakness. So as you see this candle showing as weakness, you can bet for the downside. And use this as your stop. If it breaks above, should not pass this resistance right here. So which means this is your stop loss. This is your stop loss. This is your stop loss. This is your entry short. This is your entry short. This is your entry short. Now you have a trend line here. You have a trend line here. So you can make this trend line your profit area. You're going in short here. You already have a low here. So you can make this low a profit area. And you can take your profits there. Just to be safe. The whole goal is to take money out of the market, not to try to make every dollar out of the market. You take your profits around here. So this is your stop loss. Let's say you enter your short position around here, 171.5. Your stop loss is at 175.63. What does that mean? That means that had price gone against you, closed above here, goes against you, and it does this and holds above, you have to get out of your position. That means that this play is no longer good because what's next after here is this. So to avoid this, you should exit your position around this area. Respect your stop loss. Respect your stop loss. So with your stop loss here, you go in short here. If price never goes around here, price can move around here, it could go here, it could go here. But if it never closes above this line, which is your stop loss, if it never closes above this line, you should not exit your position. You should not exit your position. That's why you only play what you're willing to lose, because you have to give it that extra wiggle for your play to work. They play games. For example, here, had this person taken a short here and then they did this, they took a loss. They took a loss. They took a loss because this could have continued up. As long as price stayed under, their short was fine. As long as price was under, their short was fine. But because it broke above, and this was kind of a big, this is a pretty big candle. This is a pretty big candle. So most traders would exit their position around here if they don't wait and see what the next candle does. The next candle could either continue be a green one as continuation up, or you guys see this red one as a sign of weakness, and then it starts to come back down. Starts to come back down. Here we are again. Here we are again. So now we have a lower high. We have a lower high. This is a better entry now because we have the retest, broke down, came back up, retested. It's a lower high, and then continued its way back down. So at this retest, it's a good entry because from here to here we have a $4 risk for the reward that we can possibly get. $16, we risk $4 and some change to make $16. You guys see that? And then here you take this profit area because this could easily bounce here. This apparently was a fake breakout to trap some bears. But had you not taken your profits around here, this could have done this. And then you could have lost some of your profits. See how they right here rallied back up? So just to be safe, you already had this support here. You had this support here. Just to be safe, take your profits at your previous low. Take your profits at your previous low.